ready to go.
Hey, good morning, everybody.
So we'll double check.
Coffee with Adam and John.
There we go. There we go.
What are we going to talk about today, Adam?
Today we're going to be talking about what is a pre-approval.
That's right.
And so, John, what is a pre-approval to you?
Well, a pre-approval is the very first step in the process for buying a home. It's the first thing that you do when you call a lending institution, your loan officer, whether it's a mortgage broker, a lending institution like us, or whatnot, and you have an initial interview with the loan officer, where they are going to either meet with them face to face, or possibly just a telephone interview. You're going to give all your details, employment, any kind of assets, anything that you have that's going to qualify you for the loan. And sometimes you might come in and bring stuff. Adam, how do you usually do a pre-approval?
What I do when I do a pre-approval is, first thing I ask for is a pay stub. So if they're a W-2 employee, I ask for the most recent pay stub to make sure that what they're stating their income is correct. There's several different types of pre-approvals. There's a credit pre-approval, there's a full pre-approval. It just depends on the loan officer who's taking the application if they've had a lot of experience. Some people will just do a quick pre-approval and just be like, okay, the credit's good, we're good to go, we can get this loan closed. And then I'll get a phone call and say, hey, this lender, they all of a sudden at the last minute backed out, they can't do the loan, they had a pre-approval, but their debt ratios are too high, can you take a look at it? Well, the good thing is, we go higher than most people in the state and in the country on the debt to income ratio, so I take a look at it, and 9 times out of 10, we can get it done. So, but it's always good to double check and make sure, hey, 1, their income is what they say it is, and 2, that their credit is as well as good. We don't have any overlays, so which also helps where if a new loan officer or a loan officer hasn't been doing it very long, they don't understand their guidelines and their overlays, they come back to, they don't have enough trade lines. Well, that's another reason why I get a lot of referrals from different lenders, is because they don't know their overlays. So it's always good to be with someone like me or John or anyone that works here, is to make sure that your loan officer is scrubbing your pre-approvals, making sure that they are strong pre-approvals, not weak pre-approvals.
Yeah. Well, I mean, the strength of a pre-approval, in all reality, when it comes right down to it, it's like, I could write a pre-approval for Brad Pitt, but that doesn't mean that he's going to show up to closing and get a loan. So it's like pre-approval, the strength of that just really comes down to the competence of the loan officer, reviewing your information, knowing their own product guidelines. And then, number 2, it comes down to, the internal process of the lending institution, so that the underwriters not only underwrite in a timely fashion, but they maintain consistency from file to file, meaning that you don't have one guy that requires a verification of rent for an approved eligible FHA deal and the other guy does not. Things need to be uniform, because when we're out there, writing pre-approvals, getting people into contracts, getting started to buy houses and everything, we have to make sure that what we tell people up front, comes to pass. And, we have to depend on our underwriters for that. And that's one of the things that I really try to focus on, is knowing guidelines up front, so that when it gets to the underwriter, there are no surprises. I'm working with multiple people right now who actually had started out, they had a pre-qualification, approved by the the lender with a pre-qualification, went into contract, put their earnest money deposit. They were really only a couple of weeks away from closing. File got to the underwriter, and the underwriter said, no, this isn't going to work. So they come back, and that's just kind of like a tough luck story. There's nothing that they can do. But good for us. We do not have a lot of overlays. Security National, in fact, we have no overlays. We maintain everything completely consistent with basic guidelines. And let me just tell you real quick, overlays. What that is that the government writes a basic set of guidelines for all the lending products. And all of us are pretty much secondary market lenders, meaning that our loans are sold on the secondary market. So I mean, it really doesn't matter almost who you close with these days. I mean, a lot of the loans are going up to Bank of America, to Wells Fargo. So in order for the loans to be interchangeable on the secondary market, they have to all conform to a basic set of guidelines. But then us as the lenders, we have the freedom to be able to impose additional guidelines on top of the basic rules. And those are called overlays. That's the reason why you might go to one lending institution and try to qualify for an FHA loan, and maybe they tell you that the minimum credit score is 640 or 620. And you can't go there because maybe you're a 590. Well, we go down to the minimum credit score for FHA, which is a 580.
For the 96.5%.
Right, 3.5% down. I mean, there's flexible sources for down payment. But, it's the overlays. I mean, it can confuse people because, I mean, you go out there looking for a loan and, you go one place and they maybe deny you for an FHA loan. You go to another place and you get approved. Both FHA loans, it's just that, one lending institution may choose to have more overlays, than another. And so that's where you have the variance between lenders.
Yeah, and another topic, I was telling you guys about W-2 employees. There's also, we get a lot of referrals from loan officers and lenders due to self-employed individuals. I've ran into so many times that I get a referral that was pre-approved and the income wasn't calculated correctly, not just by the loan officer, but the underwriter with that lender, not understanding self-employed tax returns, the 1120S's, the Schedule C's, what to add back in, what not to add back in. And it just surprises me to no end that some of these underwriters do not know how to underwrite self-employed individuals. Right. And, going with me and John, that helps out tremendously because we know these tax returns forwards and backwards. We write the income up before we even submit it so that it's easy for the underwriter to be able to read it and go back and look at those tax returns and say, okay, I see what he's adding back in. Yes, this is approved. So on the self-employed individuals, we always have them send us their last 2 years tax returns when they're self-employed before we do the pre-approval.
Right.
Just to double check, make sure, and if there's even any question whatsoever, we have the option. It's called Blue Crew. We can send up those tax returns and we can get an answer back from the Blue Crew and say, hey, yeah, this is the income. Do not worry about it. You're approved. Before you even get into a purchase of contract, because you as a realtor, you don't want to waste, a ton of your time or waste your customer's time going out and showing 20 houses when the customer's not even pre-approved yet. So definitely, that's one of the things that we work on all the time on this. So
well, like I said, I mean, it comes down to the competence of the loan officer to know their own guidelines,
right,
and to be able to know what to expect out of their underwriting department. And I mean, that's really all that a pre-approval comes down to. So I mean, there's a lot of people, it's like they like to take things, throw it to the wall and see if it sticks, and a lot of times it slides down pretty messy. And we've cleaned up that mess a lot of times, and we can keep doing it. So,
and one more thing, I saw a video a while back. I don't remember who it was, but you might run into this as a realtor or as a customer. If you had a foreclosure in the last 3 years, there's a thing with the government loans is CAVRs. And so if you've got a CAVR claim, let's say you had the foreclosure exactly 3 years ago and I take the application. And it usually takes 6 months to a year, and the longest I've ever seen was 5 years, which was just ridiculous, for the lender to issue their insurance claim. And so that CAVRs warning would come up. Now, I have not met any other lender out there that would allow you to have that CAVR claim, and usually when you get that file, it gets turned down. Because the loan officer doesn't know what to do. The underwriter doesn't know what to do.
Adam has actually got people's CAVRs report cleared. I'm talking about, dead in the water at another lender. You bring it over to this guy. I mean, he gets on the phone with the people at CAVRs. Yeah. And I mean, I've seen him get it cleared more than a couple times.
Yeah,
more than a couple.
The process takes a week. I have a contact within HUD. I show them that the foreclosure it was 3 years ago. I do a letter explanation. I show them the proof, and I can get those records suppressed. So, and a lot of lenders don't know how to do this, and there's been videos out there saying, oh, you've got to wait a year or 2 years after the claim. No, that's not true.
Yeah.
Give me, John, Daryl, anyone out of this office a call, and if you have that issue, we will get that fixed, and you can be in your home and get that pre-approval.
Real quick, CAVRs, just to kind of back up and tell you just a little bit about what that is, just from a simplistic point of view. CAVRs is kind of like the government's little system for, I don't know, putting a black mark on your record. So whenever you default on any type of a federal debt, be it a student loan, an FHA mortgage, for example, you foreclose on an FHA loan, well, what happens is you know, you are going to have a mark on your CAVRs for X amount of time before you can obtain another government loan. So that's what we run into a lot of times. You know, someone has a black mark on their CAVRs. I mean, they're not hasn't been on there long enough, and we got to get it off.
Yeah, and so it doesn't take a lot of work. I started doing it probably about 5-6 years ago. When the market crashed, right after the market crashed, I just started working on it and seeing there has to be a way to get these things fixed. And so the first one took me about a month because I had to go through all of HUD. And HUD is sometimes really bad to try to get a hold of, but it takes a while. Now it only takes a week, and so it's something that if you're running into, you need to give us a call. You know, if you're self-employed, if you're W-2, if you have a CAVR issue, a debt-to-income issue, if you have any issues whatsoever, or if even you don't, if you want a strong pre-approval instead of a weak pre-approval, where you can rest easy at night and you know your loan will get done, you need to give us a call.
Yeah, I mean, I can't stress it anymore. I mean, it's like pre-approval, buying a house. It's a humongous thing, but the fact is, a piece of paper that says that you are pre-approved comes down to only the competence of the loan officer and his knowledge of the internal system and underwriting guidelines that he has with his lending institution or her.
Yeah, and also the strength of the company and the strength of the underwriters that they've staffed.
Yeah.
You'll run into some underwriters that just do not want to listen to whatever that loan officer has to say.
Oh yeah, we've all got to run
and they're
around.
going off the tracks of their guidelines. But we don't have to deal with that here at Security National, because you know what? Our underwriters, they take what we say and we show proof, and they take it and they do it. They get it taken care of for us. They don't give us a run around and say, oh, okay, I don't like this loan officer, I'm just gonna not do it. No.
Well,
there's no emotional underwriting
right. If it
within
meets the
our
guidelines,
company.
If it meets the guidelines, it should go through.
Yeah, it'll go through. But I've done it for almost 20 years. John's done it for about just as long. And we've been through a ton of different companies, and we've ran into different underwriters that emotionally underwrite, which is always not a good thing. And so we're glad we don't have to deal with that here. So,
well, I think you about ready to wrap it up.
Yeah, let's just wrap it up.
I'd say next time when we come back, I think.
Hold on a second. Hold on. Let's see here. Who's watching here first? There's any questions? I see Jeremy Mix is watching. Let's see. Oh, your wife's on. She's watching.
Oh, that's good. That's good.
Just making sure you're doing right. So, but if you guys have any questions, reach out to us. We're gonna change this up, I'm sure, with each one that we do. We're gonna probably start giving away some gifts for each one that we do. This is our first one, so let us know how we did. This is going to be an evolving process with each one of these videos, and I hope you guys enjoyed it.
Yeah, hope we can help some people out. Hope we can give some information. And, you know, if there's anything you guys need, just give us a call over here at the office, and we'll do whatever we can to help you out. I think, you know, next time I think we'll maybe talk about, you know, what happens next. Like after you are pre-qualified, what's next?
Exactly.
So I guess until then, guys,
And we're gonna get out of here. Hope
Yeah.
you enjoyed it. We
Yeah.
enjoyed it for sure. So, thank you guys for
Have a good
watching,
day.
and